Hello everyone and welcome to today's major markets update for Wednesday, August the 24th, 2022. Are we going to get a last little step lower or are we going to bounce more directly? There are enough tiny little scribbles in place to suggest we can already bounce, but wouldn't be surprised if we break below today's low. Then we can see a little bit more downside before we see the upside. And here are all the household items. There will be in the slides sent to you. And this is the summary slide, which I will cover in a bit. So let's start off with the S&P 500. As I showed here, we have enough scribbles in place to suggest wave 5 of A/1 is complete. I do not know yet if it's going to be an A, a B, and a C, which is preferred for a fourth wave, or if we only got a bearish 3 waves up since the June low. Market hasn't proven it yet. As I said, over the next coming days and weeks, and I said this for a while now, we need to see proof of 5 waves higher. If we're going to get 5 waves higher, then that is technically bullish because markets impulse in general over the longer term higher. Bears will slap an A label on it. It's still okay. Bulls will slap a 1 label on it. That's okay. But we slap a 1/A label on it because we don't know yet if it's going to be an ABC or a 1, 2, 3, 4, 5. Nobody knows. We have no opinion about the market. We track it accordingly. So what we have here is so far a extended third wave, which could of course be a C wave. It's extended. Normally it should have topped here at about 42.25. We went as high as 43.25. Therefore, as I speculated, I think on Monday, the current deeper than expected pullback should not be really a surprise. If we stretch the rubber band a little bit too far to the upside, we might get a snapback and then reset a little bit lower. But so far, nothing out of the ordinary. Still looks better as 5 waves haven't completed. If we break above today's high, which is pretty much the same as yesterday's high, then I'm going to look for 42.20 to 42.45. Potentially 42.70, but let's not get too carried away. That's the initial target zone. That's on a break above yesterday's high and of course, yes, today's high. Okay, not an intraday break. I would want to see a daily close above it. Okay, not these stabs that are hard to track. We really want to see a daily close. That will change, namely, the whole daily chart. And then we should see a C wave lower. Alternatively, we break below yesterday's low or today's low, whatever it is, it's fine. This little low here. Then we had a subdividing wave 4, an A, a B, and a C. And then we should target around 4,085-ish. Let's make it 4,090 plus or minus 5. And then we're going to bounce a little bit lower to about 42.25 and then lower again. Okay, then we get the A, the B, and the C. Still fine. Why is that still fine? Because we need, if this is a fourth wave, a zigzag. Why? Because wave 2 / was, in this case, a flat. So this is an A, this is B, and this is C. Similar as we have here for the S&P 500. Similar as we have here for the Dow Jones. Not the semiconductors, but also for the IWM. So that aligns the wave counts. So I have adjusted this slightly. I initially had the wave 2/B in green here, 1, 2, 1, 2. It's fine, it shows you that you can wave count things differently and still get to the same conclusion that we topped for C3 in this extended upside target zone. So then the ideal target zone, which is a 23.6 to 38.2% retrace, is where we are right now. We already reached it. Bingo, picture perfect. So if we go above today's high, which is also equal to yesterday's high for the NASDAQ 100, I'm going to look here for about 13,500 to 600 for the B wave before wave C gets underway. Now, since we have already dropped lower, already reached the lower target zone, this wave 4 might go lower than what is ideal. But since even the third wave wasn't ideal, it didn't top at 161.8, but it got closer to 200%, just as I showed you for the S&P 500. Nothing says it must be ideal. Far from it, it would be almost too easy. Once in a while, we get very ideal internal wave counts, but it doesn't have to be the case. Then we simply shift, of course, the fourth wave target zone lower. Okay, a 50% retrace is fine as well. It doesn't have to be a 38.2. The 23.6 to 38.2 is our original anticipation. Then we monitor for it, reached, bingo, picture perfect, maybe done, maybe not, I don't think so. And then we adjust accordingly. And we have to adjust accordingly because the initial decline has been a little bit deeper. Then we get the bounce again to about 13,500 and a C wave lower. A, B, C, a flat wave 2, then wave 4 must become either a triangle or a zigzag. Since we're tracking 5 waves lower, it cannot be a triangle because triangles are 3, 3, 3. A zigzag is 5, 3, 5. 5 waves lower means we're going to see a zigzag. Very simple. This wave 2 here in July was what we call an irregular running flat. The low in July was not as low as the one here in June. Nicely running flat. I like it. So far, so good. So remember, we anticipate, of course, originally a 38.2 to 23.6% retrace. If we get a deeper one, then we see what is the next Fibonacci level. Down to 50% is fine. We have seen some very deep, steep fourth waves in this bull market that started in 2009. Again, this is assuming we're going to get 5 waves higher. This is the option I'm tracking right now. So if we start going below 12,500, then alarm bells start to ring that this is maybe not wave 4. Intraday step below it is fine, but I don't want to see daily closes. It starts to increase the chance that we are in something entirely different. It will open a can of worms, okay? So that's what we're looking for here as well. So this is a very busy chart of the Dow Jones. And let me zoom in a little bit here so you can see it a little bit better. There we go. In that we had this overshoot here, this blue arrow. Typically, this wave 3C should have reached 161.8 at about 33,730. We went all the way to about 34,290. So this blue arrow is the overshoot, so it wouldn't surprise me if we get some undershoot for the wave 4. The ideal wave 4 target zone, as illustrated by the blue retraces, shows us what is typical, all right? But the overshoot already suggests we weren't even typical to the upside. So we don't have to be typical to the underside, but that's all we can initially go by. And that's what we're doing. I would really like to see this last step lower for a crisp, clear 5 waves. It's not necessary. If we go above yesterday's high, I think it starts to become quite obvious that this B/2 is underway. I don't know yet if it's going to be 5 waves lower on a bigger time frame or not, but I prefer the 1, 2, 3, 4, 5 based on the market internals. But again, price will be the final arbiter, and we're tracking it nicely. What's good, we have already reached the ideal wave 4 target zone, so no surprises. If we get this wave 5 lower in orange, expect to about 32,700 plus or minus 100, then the bounce, and then the C wave lower, which can reach to about 32,200. Nothing out of the ordinary, no overlap with wave 1A, fine. Even if we overlap, this can still morph into a diagonal, a leading diagonal wave A/1. So even overlap is nothing yet to get too bearish about, but of course it will really start to open that can of worms, and the worms will start crawling out. We can try maybe the market put them back in the can, but we're not there yet. So we're slowly gonna see if we can get this last little 5 waves lower. Not necessary. There are enough scribbles in place on the shorter time frame, but it would look nice also on the daily time frame. Semiconductors, same here. I was looking for this 3, the 4. Haven't really reached it today, but yesterday we got pretty darn close. And now a wave 5 lower to about 2800, 2750 would look really nice for this regular expanded flat. So here on the NASDAQ, we had a regular running flat. The C wave didn't go beyond the end of the A wave. The semiconductors is different now in that we have then a expanded flat. Would look really perfect. Note that the semiconductors bottomed early July and all the other indexes already in June. So the wave count is slightly different. Counts much better of having already completed 1/A and now in B/2 or 2/B. Okay, so this looks A, a B, and then the C wave is unfolding in 5 waves and then off to the races. Would not surprise me whatsoever. That's my preferred view. Lastly, the IWM would also look better with this gray wave 5 lower. If we get it, I'm expecting it to about 187.5-ish. based on a 5:1 relationship to be determined, don't know it yet, but that would be ideal. That's all we can go by. And from there, we then get a bounce to about 185 plus or minus 1, and then we should move lower to about 180, 184 and a half. So we will get a deeper wave 4 retrace than originally anticipated, which is here. That's the anticipation we go by based on standard textbook retraces. But since we already, as I said many times before, expanded to the upside, then we can maybe expand to the downside as well. As long as we don't overlap here with about 178, which is 1A, then I think we have a very nice setup for wave 5 afterwards. And once again, even if we do overlap with wave 1A, it can still morph into a diagonal, either an expanding diagonal or a contracting diagonal. So it's still not the end of the world, but we're still miles away from that to even start to consider it. For now, these are the preferred paths going forward. So, quick summary. A last smaller fifth wave lower would be ideal on the hourly time frame and the daily time frame before the bounce gets going. Now, if this is a fourth wave, a larger fourth wave within a impulse higher, then it should be a zigzag, multi-week long, and likely go deeper than the typical 23.6 and 38.2% retrace of the prior third wave. We already reached the 38.2 and haven't even completed wave C yet. So very simple. Below today's lows targets these levels, above today's highs targets these levels. It all depends on if we get this smaller fifth wave lower or not. There are enough scribbles in place to suggest the first leg lower, A/1, is complete. I believe it's A if we track the zigzag. Why is it a zigzag? Because 2/B was a flat. So in this case, we're reaching with the wave 2 for this, the S&P 500, NASDAQ, Dow, and IWM, not the semiconductors. Now, since the third wave extended, the fourth wave could be a little bit deeper than normal as well. We've seen it especially in the bigger picture, like the March 2020 lows, which was a quite phenomenal C wave low, much lower on some indexes, like almost a 50 to 62% retrace. So nothing out of the ordinary as long as wave 1 and 4 don't overlap. So that's all we have for today. Let's see what we're going to get over the next few days. Seems like this Jackson Hole phenomenon on Friday is getting priced in already by the market. Maybe it is a sell the rumor, buy the news type of event. We'll see. We have our price levels. That's what we go by. I cannot anticipate how the market is going to react. On Friday, we'll know tomorrow already a little bit better if we are already in the B wave bounce, which will be 3 waves, an A, a B, and a C. Or if we are still trying to subdivide a little bit lower for this A wave. And then we go from there. Short, sweet, and simple. Take care, trade safe, and I'll see you all on Friday. Bye.